It's the weekly 30-30 list on the ASX. We're looking at the top 30 momentum companies over the last quarter and the top 30 companies on the launchpad. They're the ones whose momentum has improved the most over the last week. Gary Glover has been through the list and pulled out his favourite charts to go through. Good morning, Gary. How are you?
Yeah, I'm great, Chris.
It's been a little bit of a break, but we're back into it. So how is it?
Yeah, this actually looks like a pretty interesting sort of set here, actually. So yeah, I mean, if we look past our first 5 stocks here on our quarterly momentum list, I think 3 of them are under takeover of the top 5. So can't really sort of trade those. I mean, some people can trade looking for another bid there, but that's, as traders there, that's sort of limited opportunities there. I think sort of number 7 there was FBM, which was sort of future battery. So again, pretty lightly traded, a bit of a small one there. But I think INF, this is sort of first one here that I sort of saw had a bit of some big volume here. So just, again, looking for sort of volume to get going. So it's had a bit of a pop, big volume out of the range. So probably looking for some sort of consolidation there. So it's probably the first one there that I'll keep an eye on. MEI was sort of another one there. Just volume starting to sort of taper off a little bit here. So volume on the first leg had a bit of an ABC pullback. We're rallying up here. It can still go to a new high there, but the volume profile is definitely sort of subsided. So that won't attract me. And yeah, this is a very small one there. I think we might have mentioned actually this one.
Yeah,
maybe just because
the ticker,
the code was caught my eye, SRN. So yeah, there was another one. There's another cool one. There was one called MI6 actually on this list, which I thought was pretty cool. The chart was obviously less cool because I didn't really cover it. So, but yeah, pretty small one as well. One on the list here is that BOT, Chris, which we have covered a few times. So if you remember there, this did actually come up on the weekly launchpad pretty early. I think after this bit of a volume play, had another sort of secondary volume spike there, and then it just that tight sideways pattern in there, really nice tight consolidations. I think at the time there we said we really want to see a pause, and then so if you saw that tight little sideways pattern there,
low volume like too, right?
Tight flag. Yeah, low, that's all the classic signs there, and then you pop through it there. So you can sort of follow those. I know it's pretty small here, but the fact that we had some good liquidity in that, pretty impulsive, and a nice little tight breather, and then a nice pop here. Look at that move there. So it's gone from what, 8 cents up to, when it got to 11.5 pretty quickly. So pretty decent move here. So having a bit of a breather, a bit more volume starting to come in on these sells here now. So it's probably the sellers are starting to get a bit more active. So probably just have to watch that one there. But yeah, had a nice little move there. That's, when you see those ones sort of pop out of the range and then have a breather there, that's what we're looking for. NEU sort of interesting here, this sort of Neuren Pharmaceuticals, because I think we sort of had this one previously. There was some decent volume at the time there. This looked pretty big at the time off that last low there, and I think that was like a false break. So it came back to the trade at the bottom of the range, had a bit of a tight little square off here, and had some good news and gap down. So a bit hard to chase the gap here, a new high there, but all that volume has just sort of continued on. Lastly on the chart here is pretty interesting because they've sort of got a nice little high tight flag here, Chris, as well. So it's a pretty decent gain, and then we've had, so all this sort of, all this movement here is all very tight, not much volume there. And then I think yesterday, stock broke up, closed at a new high.
With so more volume.
With a bit more volume as well. So that's actually kind of constructive there. So no, it hasn't gone on today here, but normally that's a signal you'd normally follow that. So it's you're often hard to follow these big moves because they sort of feel like they've already run too far. But this is the classic sort of momentum stock that has this little breather and then kicks on. So I don't know what their average move is, the high tight flag. You probably might know that better than me. I think the average rally coming out of those high tight flags is pretty decent still, at 30-40% or something from memory.
Yeah, if they have like a 75-80% flagpole rally, 100% is ideal. Then there's like north of a 70% chance that they will run that same rally again out of that consolidation. So I add the caveat there that you double the chances if it's in a strong theme. So you've got other companies in the same thematic doing similar things, then it doubles your chance of hitting that profit target. So.
Yeah, probably at the moment, not all of those stocks in that sector are running at the moment. This is probably one that has, because I mean those biotechs, they were running early in the year. I just haven't been running recently. Maybe this will lead the way out here, but yeah, probably the sector is definitely not on fire at the moment. So maybe that gives you a little bit more measured sort of target there.
Yes.
Sezzle was sort of one that was pretty interesting, sort of probably one that I wouldn't trade here, but I thought the chart was pretty interesting here. This is, reasonably impulsive. I know it's a bit light volume there, had a bit of a pullback in there, and then we sort of started to, sort of tighten up in here. Had a little bit of a false start in here, so it did give us a little bit of a B-wave break in there, but never really closed above that little swing high there. That was sort of the key marker for me to be closing above that. Never really did that, but it did came back and then started to come in a bit more volume here. So might have a little cup and handle sort of developing in here, Chris. Nice and tight here so far. Not a sector I'm overly keen on there, but the chart's not the worst there. Sort of, remember, I think Tyro was the other one that sort of looked similar to that, and had a bit of a cool off and went sideways for a while, but it did eventually break out there. One that I won't be trading on the chart there is RFX there, just because, see how this has had a bit of a pop here. Only the last day here has got volume, so there's really no volume in that move until, and that's moved a lot here. Look at the volumes previously. Yeah. So light in here, so I want to see, better volume in that. So that's
a good point, because it has broken a B wave, right? But you're saying the volume just doesn't compute with what's going on.
Yeah. When I see stuff like this on light volume having to move through there, I always worry about things getting, things get pumped up here, and then all of a sudden the day later there's a capital raise announced. So they get bid up here and forced up, and then here, and then they do the raising back down here again, So, but yeah, that just a suspicious in me. So it's just be careful there. FAU, sort of, this is a small one here. Big volume there, so just interesting there, sort of like probably 6 days of actually extra volume there. That's pretty small stock, so we're very tiny on the, so to me, I'd probably do a bit more homework on that one there. Just the volume is the one that's sort of catching the eye, but very small, hard for me personally to trade that. PAA is another one with pretty decent volume as well, so Pharmaust Limited. So yeah, just had okay volume in this off the low here, some okay volume through there. Did lighten up through this whole sequence there, and I think we saw a bit of volume sort of start to develop at the low there, tightening up. So a little ABC back in here, tightened up in here, and then eventually sort of broke through. So this is sort of like probably a trigger day here. All the volume actually was quite good. So I had a bit of a selling day the next day, but then I was actually able to absorb that and go straight back up again. So don't know, it's a little tricky, probably too small for me, but not the worst looking chart there. That one there. The one that I didn't see, which I wish I had seen, is actually Nuix there. I did sort of see this pop. I think this made our list a few weeks ago, just because of this high momentum move there, pretty big volume. But we've had this little pullback, decent volume actually in the pullbacks. That would have had you probably on high alert. Then had a bit of a bounce, sort of modest volume. Then the selling on the second leg was probably a little bit less light, and then we've had a little bit of a bounce, and then the selling just stopped. So when you see no volumes going through there, and then so we've got a pullback there, second pullback, a third pullback. So you kind of got your VCP there in a way, Chris, because sort of that pullback's the largest. This is the second, so it's obviously narrower, and again this is tighter again. So once it goes through, above this high here, that's the sort of, you shouldn't be looking at this until we break above what I consider that little B wave sort of type here. So breaking above a sort of swing high. So that did come through. There was actually some good volume starting to come through here, and it did break through there. So that would have been a nice little trigger day here, just breaking above that high there. So,
well, 2 points on that. As you're talking about that congestion, and as it's breaking out of that B wave, it's compressed back onto the red line, that 50-day moving average, which is also around that same area, that first congestion after that pullback, right?
Yeah, it's not this sort of classic sort of ripping signal in that, like, you prefer to sort of see a correction be a bit more milder. So sort of, impulsive and then more of a corrective sideways pattern. So it's definitely come back a bit deeper than you'd like in that regard, but that's had a pretty good move on some good news there. So, and then kind of retreated, little ABC back to the 50-day and then starting to build again. But yeah, just sort of, I just not a bad little sign there. Just apart from this being a little steep, you prefer it being milder. But saying that, had a pretty good rally as well. If you look at what have we gone from sort of 50 cents to 160, so it's gone up 300%, and we've only really come back maybe a third of that range. So in that regard, you're probably going to come back just over a third. So it's not bad. Still staying, reasonably tight there. If it stayed in the say top quarter or stuff, they'd be obviously stronger, but still decent.
Well, as you're saying, the top third and top quarter, that's reminding me of William O'Neill's book, How to Make Money in Stocks, where he talks about the cup and handle in great detail. And that pullback you're talking about, the top third, the top quarter, ideally, I think is his rule of thumb. You've had that rounding bottom. Obviously, we can't see what's on the left of the chart right now, but that pullback on the right that you're focusing on, is it that he talks about you ideally want to see maybe like a 20% correction? And obviously,
he likes them nice and he likes them sort of smaller there, and obviously that would be better if it was more of a squarer sort of pattern as well. So that this one's a bit of a rare, not rare, but it's sort of each lower high is quite a bit lower than the previous peak. So whereas you probably want to see more of a sideways orientated, I think
tighter handle.
I talked about I think I talked about Reece. See how that's sort of, it's had a bit of a pullback here, but this has gone sort of sideways, really more of a churn. So it didn't sort of come back that far in the range. So that sort of pattern there. So you want to sort of see that sort of corrective and sort of, oftentimes still on top of previous highs and that. But yeah, it's weird. Sometimes it's actually it's like the counter trend can be more revealing than the uptrend. So I mean, like a lot of stocks will pop up, light volume, heavy volume, but the counter move, sometimes they can just drop straight back. But if they struggle to go down and they consolidate and they're nice and tight and stay pretty high in the range, use up a bit of time and volume, that's what we should be studying. That's the key, is to study the counter move. Even sort of I sort of know, I sort of just not been reassessing there, but I think after having a bit of a ripping sort of 18 months, I've probably let my standards drop a little bit in the last couple of months, and the market's been a pretty tough couple of months in the market as well. But I just needed to sort of tighten up a little bit, just stick to my sort of what you call your A setups, and don't try and trade everything. Just try and trade that. So the key thing for me was just to mentally was like, just trade the strong, trade the leaders, trade the stronger stocks, trade the ones that are going through, wait for the consolidation, wait for the ones that aren't selling off too much, that are just, churning in the market. So it's okay to go through these sort of sideways or even pullbacks in the market, but what we want to do is we want to identify the strong stocks that are holding up the strongest. And we saw it, we saw it in October, Chris. We saw it in December as well. The stocks that were holding up the strongest, they're the ones that popped out of the range and kept going. So we the textbooks tell us that. We've since I've been doing this, we've just seen example after example of that applying. So we just got to get back and trade that principle. And that was an overriding thing for me. So that the last 2 or 3 trades that I've taken, I've all followed that principle. I've got my sort of my trading playbook, so I've got my sort of patterns there, but I've just been trying to incorporate that sort of strength into that into my playbook as well. So because sometimes trades can kind of squeeze into our playbook and into our rules, but they may not be as sharp or as strong as some other stocks, and maybe we're just trying to force trade sometimes as well. Whereas if we're more patient, just wait for the best looking ones, and also scaling up too. So sort of sometimes when the market's a little bit bit messy there, you end up sort of spreading yourself pretty wide and you're in a lot of trades. Whereas there's been some pretty good ones, like Zero was a pretty good setup. I managed to sort of scale up there, did that right, traded into a bit of strength, trimmed some, and then added some back and pull back. So that was sort of one that I for me when I was reviewing my trades, okay, that's the right setup. That's the way I waited for that consolidation. Away we go. So just got to be more concentrated on the better setups, and then just don't worry about these sort of B or C class trades there that might fit your rules, might just squeeze in, but just aren't quite, look for one that maybe tick 5 of your 6 boxes rather than 2 or 3 of your boxes, so
that's a good insight. Yeah, because we're all guilty of that, of having our portfolios and our trading books just sort of slowly get more relaxed on what it lets in, especially as you're saying in the last couple of months, market's been less appealing for the ideal trades. We want to be active. Yeah, it's
funny. Yeah, and you read that all the time, and I know myself, having traded for years, is that when you go through a really great period where you sort of hitting it out of the park, your standards just sort of start to just slip a little bit. You just sort of edge slightly, and you read that, and you know that personally, you've seen it creep into your trading before. So you keep telling yourself,
I'll look for it.
Get relaxed now. And as soon as you have like a really big winner, that's the first thing I say to myself is don't fall into, keep, don't sort of relax your standards now, because that's usually the time when you do, is when you have the big hit, the big home run. Right after that is usually in the past when a bad trade has crept in and you've relaxed your standards. So I know mentally I tell myself after a big win to keep the standards high there. But then I think, sort of, if you go through a long period there, you do start to just sort of gradually loosen. You're not reading your rules often enough, and, not sort of, and you just sort of got to get back in the, get back into study. For me, basically, sort of get back into study mode, get back to listening to trading podcasts every day, watching trading videos every day, just reviewing my trades, just kind of realigning. And then, it's weird, sort of just, as traders along in the market, there's still an ongoing process. You got to keep sort of, keep reading, keep studying, just keep reviewing sort of stuff there. So I think actually just got to fine tune your system into, like the one thing too, you said if you keep reading about the best traders, they just fine tune their system into, their playbook is small, and they just master of a very select set of principles, and they just become a guru, become a master of a smaller, type of setup, So I was listening to a podcast about a guy who just trades boxes. So like Dove's boxes sort of style, and all he does is trade ranges, and they break out. He trades them. Pretty simple there. But I think this guy, he made about 60% last year, just trading these boxes. So interesting there. And that's all he does. He doesn't do anything else. He trades one, and I think now he's he's got 2 programs. One just trades one instrument only. So one, and it just trades the box. It just trades these sort of set rules. So it's a very simple system. But that's all this one program does. And the other one, he trades the leading stocks in the US, sort of tech stocks in these boxes as well. But very, very finite, not a wide playbook, very, very tight playbook, very specialized, finite set of rules, simplistic, nothing too complex as well. That's one thing I've sort of realized too, is that you make it, if you build too many indicators in, too many rules, the complexity adds up. You just got to fine tune it, take the rules out, take your indicators away. Just it's almost what's this minimalistic sort of
living and
in
trading.
life that I know that's sort of creeping in. It's a lifestyle choice that a lot of people are choosing now, and obviously getting quite popular. But that does epitomise the best traders. Is that minimalistic sort of that view there? So I digress. Next one on the chart here was SMN. I thought this was pretty interesting, just because of the volume, Chris, as well. So downtrend all the way here. Did finally break above swing high there. We did break on some volume there, which is sort of interesting, and then had a bit of a pullback, no volume, and then pop, we've sort of gone through again. So this has sort of come back out of the range. This one's a bit of a small one here, but probably sort of being 60, 70 cents. It's the sort of stock I do quite like trading, that sort of size. Sort of, I prefer not to trade the sort of 1 or 2 cent stocks, or even 8 or 9 cent stocks. Just the percentage moves can be, a bit brutal if you're wrong and stuff, and liquidity can be tough on those small ones as well. But when they're sort of 50, 60 cent stocks, there's a little bit more, and there's liquidity there. I don't mind those as well. This one looks pretty interesting. Just the volume is pretty decent, and even again here we've sort of popped here. So this is definitely one I'm putting on the radar here, just because it's sort of starting to get a bit of traction, a bit of volume through there. Again, we just want to see a bit of a pause, bit of consolidation there. And that's there. HHR was sort of one that's interesting as well. So some decent volume sort of creeping through here. Going back up to retest the high, so it's probably, see how it consolidates under the high. There was some really big volume here into that previous high. It's a big move up into that high there. And the volumes have dried up through here, and then just sort of started to get a bit more traction again here. So maybe this will go up to the high here, maybe contract here, maybe a little cup and handles possibly. But yeah, definitely one just to watch, just because the volumes are pretty healthy. A4N alpha, look, probably a little small here, but did get a bit of a cup and handle. Probably, you talk about this being probably too deep a handle. Probably want to see a little shallower, but there was some okay volume sort of through here, pushing through there. So not the worst looking chart there. So not bad. There's quite a few small ones in there, but when they're trading big volumes, that those are ones that really can kick on there. And we saw that really with like that BOT. I'm not sure if it's the code there, but I just remember that stock because the volumes are out of the box. So when it first started here, the volumes were really high at the time. I thought, oh, that's actually pretty big volumes there going through the market there. Just wanted to see a pause here. So unfortunately, I didn't too much going on here. Didn't see this pause here, but that's the type of thing that we want to see after a good move. So some of these small ones are covered today. They might be sort of running hot here. It's a good volume. If they have a little pause like this, go sideways and drop in volume, and then start to push through, we definitely want to sort of follow that. So that's what we're looking for some of the small ones. On the weekly hop there, I think FAU was sort of one that was on both lists. Big volume in there. NRZ, carbon neutral fertilizer. So pretty interesting company. Been in a downtrend for a long time there, but a bit of a pop here on some volume. Interesting sector there. Not particularly heavyweight holdings and by insiders there. So that's sort of something that I look for. If I like to see management with a bit of skin in the game, and I probably didn't see that heavily there. But yeah, had a bit of a pop on some okay volume. Bit small for me. PMT. This one was sort of I was more curious about, Chris, because this is sort of like a pretty new IPO stock. So look at it. Geez, it's had some
volatility.
This was a 60-cent float on the IPO. Traded to 180, 190 in the first 2 days, which I know that's a pretty big pop. Eased all the way back here. Come back to 67. Gone to a new high, which little false break up here, which would have made me nervous. But not bad volume through here. Good volumes all the way up here, and then it's pulled back here, and pretty light selling through here. So that's the thing actually. All through here, no selling through here. So I know it's had a bit of a pullback there.
Climactic.
So interesting. And then look at that, exactly. Exhaustive volume. So almost everyone, it's like the sellers finally give in. All these buyers in here that probably are holding out for bigger gains.
That's massive volume on a relatively narrow range compared to its last 3 months, right?
Exactly right. So as the sellers just said, he just threw his hands up, just get me out. And then, so then I've just got to, someone's got to absorb that stock.
It's accumulated.
And then, and then it starts off slowly, and then, the selling's disappeared, and then, it starts to go up. And we've had a decent sort of pop here. So definitely one that sort of caught my eye just because of the high, because it's high beta, how much it's moving around here. But and the volumes are so far pretty decent. So I like that volume in that rally. No selling going on here, and then you're starting to see some volume stepping in down the lower side here. So definitely one to keep an eye on there. Probably want to see some sort of consolidation, but Patriotbatterymetals, obviously in a bit of a leading sector, you might say. So definitely one to keep an eye on, being a new stock. Infinity INF, big volume again, Chris. So nice little pop there. I think it might have been on the other list as well. It might have been number 8 on the quarterly. So, so it's a lot of stocks that have jumped up quite a bit here. So again, just waiting for a bit of a breather on that one. RNU volume okay without being great. Modest. PLS is sort of interesting there. Obviously, we've seen Liontown get bid for. That sort of popped up. Sometimes they can pop up and disappear. So tricky one here. We've sort of definitely got an ABC back in the range. So that's okay. That's sort of constructive. I think our weekly is again showing an ABC. Probably prefer it to sit on top of this old high, but it's still okay. What's more important here now is we've had a bit of a pop here, Chris. Maybe 3 or 4 days up. How it trades the next 3 or 4 days, or the first little congestion. You want to see, if it's going to go through a little bit of breather, you want to see a little sideways orientation there. You want to see a little corrective.
Tight compression, so, closes, open and closes, tight ranges, all next to each other.
There's still a bit of risk for this sector here to me, just because it's one's been under takeover here. They've all popped up together. They can easily all come back. So the volume is okay, not bad. Just want to see some sort of little tight congestion there before we get interested in something like that. The last one there was GT1 Green Technology. So again, sort of in that, just interesting sort of, interesting sort of sector there. But just nice to sort of some volume on the rally before the previous one. Come back and retested the low. Some okay volumes in here. So starting to sort of stabilize this stock. Still haven't broken a swing high here, so we definitely shouldn't be trying to buy the stock here yet. But just the fact we've seen some volume come in at the last low, some volume coming at this current low here, just starting to sort of stabilize here. So this is definitely one to keep an eye on there for some sort of consolidation there. That's about it there. So there's a bit on the list there. There's definitely quite a few in that in the quarterly list there that have had decent moves there. And there's, I think, in the previous sort of month or two, Chris, like a lot of them just didn't have much volume, whereas there's actually quite a few of them breaking out there on pretty decent volumes. So I think I might mention it, in the last week here, or maybe on Tuesday there, that I'm definitely starting to see a few more stocks getting into sort of stage 2. So which is sort of what, basically what Weinstein sort of, suggests is sort of coming out of base and then starting to break out. So, so interesting. Seeing a lot of comments around that this rally is tight and not broad-based. So there's a lot of commentary that, the Nasdaq, still in the Nasdaq there, it's only sort of the leaders that are sort of that are popping out. It's not a broad-based rally. That's generally how the sort of start the bull market. That's how bull markets actually don't. They start that way. They don't sort of. That's the thing that sort of I find interesting. Everyone's sort of saying, "Oh, it's not a broad-based rally." That's not how it starts. So,
it also wasn't a broad-based rally at the top, right? Because I think you were reporting that more than half of the NASDAQ companies were under their 50-day moving averages, and it was still making new highs.
Yeah, so we know that the leaders lead at at the early start of the bull market, and then and also from a risk point of view as well. You generally see market go to the big caps first. So small caps are still struggling here. So small caps are still in the doldrums, but they generally are, and they stay that way for a while. So money goes to the big caps, goes sort of the safer places first. And then once we sort of get a bit more confident, then we start to filter into mid caps. And then once the market gets even more buoyant, then it spreads into the small caps and riskier eggs in the market. So there's definitely stages to the market there. So just find unusual people commenting here. So like, well,
what did you expect?
The past? Yes. So it's so everyone's calling it unusual. It's actually not unusual. It's actually very common. So
this week in
how markets normally start. Yeah.
Well, it is the same thing. Echoing the same point you're making there is in the AFR this week, they were talking about how a lot of institutions are looking to move from ETFs to active managers because in a higher interest rate, higher inflationary environment, the high tide doesn't lift all boats equally, and your stock selection is critical. Well, it's fitting in with your timing, but also in this week's report in the 30-30 list, the momentum profile had blown out to almost 40%. For the last year, we've been under 20.
Yeah. So have a look at your different ETFs there, like say industry ETFs that are quite wide orientated, and even look at some of the closed funds there. You'll see a mix of performance there. They are not, the thing about it, people think they're sort of getting like those ETFs there, people look at on the chart and go, oh, well, the ETF was up here. If the market bounces back here, it should go back up there again, should go back up to those really heavy heights. It doesn't often work that way because those ETFs there, that the weight of money moves in and out of those things quite heavily. When they're buoyant, extra money comes in, so it forces the fund to sort of keep buying more, and that sort of propels that ETF to higher levels. And then when the liquidity drops out, so does the price as well, and it goes a lot deeper as well. And that, it's like you have a big correction there. You sort of you have that mistake that if you have a 50% correction, you just got to rally 50% to get back to the same point. Well, you don't. You've got to actually you got to rally 100% to get plus to get back to the same point here. So that's what happens with these ETFs is they don't mirror the markets. They're not closed funds. They're open funds. The money can actually, that ETF can double,
move its
triple,
own market,
quadruple in size. Okay, so that means you just go and grab 10 ETFs, overlay them with with an index that they're supposed to follow, and you'll be horrified about what you see. Okay?
It's a harsh lesson.
Yeah.
Well, there are a few lessons for us to end the week on a Friday. So there's some very good insights and great to see what you're working through on the charts there, Gary. You're seeing a lot more positivity in the markets. As you noted sort of on Tuesday, it's looking stronger. We're getting leaders in there. But in this week, you've also pulled out a fair few smaller mid-caps with positive volumes. So maybe that's positive for the week ahead. And
I love climbing the wall of worry, Chris. Love it.
Well, on that point, we'll wrap and say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
On the right-hand side, we'll put Gary's Tuesday report that he talked about here, the whole playlist where you can go back and see his back catalogue. And then also on the right-hand side, we've got Trading Insights, where we cover a lot of the strategies he's talked about, false breaks, springs, volatility, contraction patterns, and so on. Then on the left-hand side, if you want to see what Gary's doing on Twitter, there's his handle.